Now, people like you and me, we know that we can go buy crypto on an exchange or in other methods, and we don't have a problem doing that. But for people who aren't crypto native, they might not like to do it. So ETFs are a great way for traditional investors to get involved in crypto. But the SEC has always been one of the holdups. Well, that is about to change because the SEC just approved new exchange listing standards that will fast track crypto ETF listings. So why don't we dive into this news? This is right from the block. So the quick take is, in a filing made on Wednesday, the SEC said it found good cause to approve of the standards early. The SEC's approval is a significant turn of events for dozens of crypto ETFs awaiting the agency's sign-off and would accelerate that process. The U.S. Securities and Exchange Commission approved an accelerated basis listing standards for crypto exchange-traded funds, quickly setting the stage for those products to be ready for public trading. In a filing made on Wednesday, the SEC said it found good cause to approve the standards early. The Commission finds good cause to approve the proposals prior to the 30th day after the date of the publication of notice of the exchange's amended filings in the Federal Register. That is a mouthful, by the way. But basically, yeah, they're giving it the go-ahead. The amended filings clarify the definitions set forth in and the requirements of the proposed generic listing standards. In other words, instead of looking at every single one and basically starting from the beginning, going all the way back and starting over on each one, they're just going to have a set of standards. And if you meet that standards, you get fast-tracked. Pretty simple. It kind of makes sense to, be efficient. Surprise, surprise, right? Like, you would think this would be obvious, but it took a whole brand new administration to make this happen. Exchanges NASDAQ, New York Stock Exchange, ARCA Inc., and CBOE BZX Exchange, I haven't heard of that one, have previously asked the agency to change a rule to permit the generic listing and trading of commodity-based trust shares that meet the requirements set forth in proposed Rule 14.11e. That rule governs the trading and listing of commodity-based trust shares and has specific requirements to have certain shares listed on the exchange. This approval helps maximize the investor choice and foster innovation by streamlining and the listing process and reducing barriers to access digital asset products within America's trusted capital markets, says SEC Chairman Paul Atkins in a statement. The SEC's approval is a significant turn of events for dozens of crypto ETFs waiting the agency's sign-off, and will accelerate that process. Firms have been looking to list funds tracking SOL to XRP to Doge in the wake of friendlier regulatory environments. I don't think they mention, but one of the standards is that you have to be on Coinbase futures. That's one of the standards that will fast track you here. I'm surprised they didn't mention that, actually. That's really kind of surprising, to not give that. That's pretty important info, because the ones that are already in futures on Coinbase, those will get fast tracked. Why we don't see that is surprising in here. And that it's not good for, if you're an Algorand person, you're like, well, I don't think we're on futures. There's only like 20 coins or something like that. The Wolf of Wall Streets had a really good point. Under current rules, exchanges must file, triggering a review period of up to 240 days. The new listing standards will reduce the timeline to as little as 75 days and allow the listing and trading of crypto exchange traded products that meet those standards without the 19B4 form requirement. Green Blago says, can't wait until the token ETFs are tokenized. Yeah, that'll be awesome. It'll be great to have this going. In a note on Tuesday, Matt Hogan, Chief Investment Officer at crypto asset manager Bitwise, said the listing standards could blow the market wide open. Nice to see. Yeah, I think 100%, because you're gonna have so many people, so many companies putting assets on, putting their money into these assets. There's a whole bunch of people that just aren't, as Scott Melker mentioned this morning. There's a whole lot of people. They're just not gonna go to Coinbase. They just don't want to. They're definitely not going to get a wallet. They're not even going to go on Coinbase. They're not even going to deal with an exchange, but they can put this in a mutual fund, and that, they kind of understand. The SEC also said on Wednesday that it approved the listing and trading for the Grayscale Digital Large Cap Fund. The agency had previously put a pause on Grayscale's move to convert the fund. That ETF trades over the counter for accredited investors and is composed primarily of Bitcoin at mostly 80%, Ethereum at 11%, Solana, Cardano, and XRP are also represented with single-digit percentages. By the way, I just want to take a little sidetrack to mention this. The whole accredited investor thing is one of the dumbest things in finance. Do you know what that actually means? Now, I used to think when I was first getting into investing, I thought, well, gee, how do I become an accredited investor? It must be some kind of test you take or some kind of online form. It literally just means you have money. Yeah, so you have to have, in fact, we can go look it up, the exact numbers, but it basically means you either have a certain amount of, a certain net worth, or you have a certain amount of income. It's like 250,000, I think. Requirements. 200,000, 300,000 if you have a spouse, or you have a net worth of $1 million, and that does not include your primary residence. Oops, sorry about that. Yeah, it's it is seriously one of the dumbest things. So if I have an income of over $200,000, that doesn't mean I know jack squat about investing. I can lose just as much money. In fact, I have more to lose than someone without that. And same with the $1 million. I just don't understand that. I've never understood that rule. I think it's just one of the dumbest things in all of finance. Make a test. If you want to, first off, why just limit people anyway, right? And if I can go put money on Coinbase, why can't I put money in private capital? That's crazy. But even without that, who cares? Just make a test. If you want to regulate it, then just make some kind of test where you have to have a basic understanding of how risk works. You know what I mean? And I'll tell you, there are a lot of people who just, I had a friend who got a Robinhood account, and she invested, lost money in a month, and just was like, I'm done. I don't want to invest anymore. And I'm like, well, that's because you did it the dumbest way. First start out with index funds and get used to that, because that's the lowest risk. And you can still, that will kind of ease you into getting used to the feeling that sometimes your money's going to go down, and you have to be okay with that when you're investing. Crypto is like that on steroids. You have to be able to watch your portfolio go down 60%, and you have to look at that and go, buying opportunity. And that's easier to say here than it is here, because in here you're like, no, I'm used to it. When the COVID crash happened, I just kept investing right through it. And you know what? That got me into a brand new category. I'll say that. I won't put too much out there beyond that, but that's the way you got to think. So I will say, I really like this new approach from the SEC. I think the new approach is doing things correctly, and this is what I want to see. I don't want government telling me what I can and can't invest in. I do want the government to make sure things are being done right, but I don't want them to put unnecessary roadblocks, if that makes sense. So good on the SEC, good on the new administration. I think this is a really great thing for crypto. Everyday Algorand says, actually in the EU, they force money institution to make a test, and the test must be tricky so that there's at least one question which repeats, and if you fail it, they deny you some services. Well, I mean, they got to make it reasonable, right? Just some basics. Just make it. I don't want any trick questions. That's a very valid concern. I don't want trick questions with something like that. I want it to be very straightforward. Just understand investing. If they're going to do that, if they're going to have an accredited investor, make it so it actually makes sense, just teaching the very basics, how an index fund works, how percentages work, what is risky versus not risky. I don't know. They could come up with a bunch of stuff, what's an index fund versus an individual stock. I mean, just easy questions that anyone who has basic understandings of investing could do. Anyway, that's my thought on that. But they can just do away with it too. I don't really understand the point. It's if you have more money, you have more ability to get ripped off. More people are going to target you. It doesn't mean you know more. You know, it might. I mean, listen, it takes a lot to build up wealth, but it can also be handed to you, right? Like if I get an inheritance tomorrow of $1 million, my investor knowledge didn't change overnight. In fact, people who inherit money probably have the least amount of knowledge. Anyway, I'm going off here. So, okay, that's that segment. Actually, I'm not done yet because we got something really cool to share. So I have to be careful with this one because it auto plays, but this is a good part of the. Actually kind of roasted him a little bit. I thought this was pretty. I enjoyed this. This was really great. Let's see what old Gary. Remember how much we used to like hate on Gary? Let's see what old Gary had to say for himself.
They are reversing a lot of what you did. And how are you feeling about what they're doing now?
So I'm very proud of what we accomplished.
And the crypto community is ecstatic not to have you there anymore and to have him there. Looking back on it, I mean, do you think that was the right call?
Yes, I think.
Because look, now we have this like burgeoning industry and there's so much more innovation and leadership in the U.S.
And a lot more
crypto.
capital coming into it.
There may be more capital in terms of the interest in the public. The public is interested. I get that. But for investors.
You think this is dangerous, what they're doing?
Put aside Bitcoin. But most of the other tokens are not tied to any fundamentals. Like Warren Buffett would say, what are the goods? What are the revenues? What are they selling? And so forth.
Oh, that delights me to know. And seeing Gary get roasted, always super fun. Here every day saying no sound. Is that true? I see the mic going. I see the desktop audio going. I wasn't playing the video yet. Easy way to find out here. That was our only video segment. Hold on, let me see. I see the mic going. I see the desktop audio going.
There may be more capital.
It kind of roasted him a little bit. I thought this was pretty. I hear the sound, so I don't know. I enjoyed this. Okay. This was really good. Anyway, Green Blue Algo says Gary gathered up the troops to tell them not to invest in crypto at 7K, mark the low. Yeah, absolutely. Made a great buying opportunity for us. That's a really good point. So yeah, my average buy was like what? How much did I? Oh, just went out for a few seconds before the video. Okay. Okay. Joe Bro says I had audio. Yeah. Yeah, I don't know what happened there. I didn't hit the mic or anything, I didn't think, but well, that's our little segment. You can see the contrast between Gary Gensler